Okay, good morning, everybody. This is Dennis Wilborn. We'll just get up online here, make sure we're functioning properly. Hope everybody is having a great Tuesday. This is the second day of the new year. It is a lot of exciting things happen today. Re-election or that runoff election in Georgia. That's gonna, could that be a market mover? We'll see. Let's see, get the handsome guy up there. There he is. We're back home in Hawaii. I'm so pleased with that. We had a great time with Brandon, Sharon, and our two grandkids there. Missed the kids in that are in South Korea right now. But we are, basically just what's funny is we get home and we immediately go from the freedom of Idaho to immediate lockdown in Hawaii. So we're on day 8 of our 10-day mandatory lockdown. We can't leave our property, our house. Fortunately, we have some really great neighbors who have taken care of us, got us situated with food and all that kind of stuff. And so, anyway, we're making the best of a good situation. What do you do when you lock down? Well, one of the things that I like to do is basically, we're just taking care of getting set up to go into the new year. And we're going to be talking about that a little bit. We'll be talking about that as we go forward in today's session. Remember what we do here on the radar? We basically overview the indexes, see what they're doing. As you can see above me, I've got a chart, a daily chart of the S&P. As we see, yesterday we had a big sell-off on the S&P, and then basically on all of the indexes had a sell-off, found support, doing a bounce. Buyers coming in a little bit today. Is that because of the anticipation of something good coming out of the election? In other words, what's good from a stock market or a trader perspective? What would be good be if and this is not political, okay? Just get it straight. This is not a political statement. It's basically the market likes it when there is gridlock in D.C. Nothing gets done. Therefore, it doesn't mess with what's going on in the market. So if the Republicans, there in Georgia are reelected and they take their place, then basically the Congress, it's split. That the Senate and the House are split, and therefore it will slow things down, and it will basically, things will get done in Washington, but it'll be at a slower pace, and some of the more radical things that might be done will not happen. So that's one of the things, and that may be what we're seeing with the reaction on the market today. And I think what going into tomorrow, what we can anticipate and expect is that if the results in Georgia are not known by the time we all go to bed tonight, then that could be a negative for the market, and we may get a little bit of a sell-off. But so, hey, let's jump in and see what the market has to say. And then I've got a couple of stocks I want you to take a look at. One for a potential option trade, and one if you like to trade a range-bound stock. This one may be just what you're looking for. So on the S&P, let's grab my drawing tool here. What is going on with the S&P? Draw on screen. There we go. As you can see, yesterday we had the big sell-off. We had a bearish engulfing pattern of basically the last few days. What we're getting today is a pullback up into the midsection of yesterday's big red candle. Oftentimes that is not an unusual move when you get a large red candle, large sell-off day, or in fact, if you get a large buy day, you'll find that there is a level of either support or resistance, this case being resistance, in the middle third of that large, in this case, sell-off candle, red candle. That's exactly where prices went today and then have basically stopped. We have nothing here that's saying, buy me. We have no reversal signals. And so we'll just wait until the news reaction is over with the, I'm right here. Can you see? Yep. I don't have your name there, but yeah, I see you. I'll come back to the if you have any questions, I'll come back to that in just a little bit. Oops. Okay. So that's what we're looking at there. So run over here and let's take a look at the Qs, NASDAQ. Similar type situation. NASDAQ had a little bit of a deeper pullback yesterday, I believe. Yeah. But about the same type of thing. I'm going to get, I left this on, we were having a discussion in one of the groups that I sit in on there, saying, and somebody was saying, well, Fibonacci's don't work. Fibonacci's don't work. And I've listened to Carolyn and done a lot of training with her. Carolyn Borden, who basically has developed a lot of the Fibonacci, advanced Fibonacci work. And I think she would, care to differ with them. Here's just a straight little Fibonacci extension off of this move from August of last year into the end of September last year. And look where the prices go. It breaks out, and then what happened yesterday? It goes up to the 1272. The 1272 was sitting at $315.30. What was yesterday's high? $315.29. It missed it by a penny. Now, that's not to say that Fibonacci's work every time, but they do provide us a clue as to where institutional technical analysts are sitting there watching, and they know that there is a large number of people who are watching certain levels on the fibs, and that's exactly where it rolled over yesterday. It ran up, almost gapped up into it, and then sold off the rest of the day, sold off hard. Now it had a nice little rebound. Getting a similar type of thing today on the Qs. We're going to bounce up into the midsection of yesterday's bearish candle. And we'll see overnight. I will be watching the... hey, Phil, how you doing? Okay, great. But if you do have any questions, just let me know. So Qs, that's what we're looking at. IWM. If you're trading with us on the active trend trading site, you know that we are in we took off some of the trade, but we were in a bearish credit spread on the calls on IWM. We took off part of the position yesterday, and now, I think we took off part of the position yesterday, and now we are basically back up, and have basically almost erased all the loss from yesterday as prices move up. I'll be watching this. If here's kind of the tag. If we break back down below the 8, watch it to move on down to the 20 and below. We do have and what's happening, and I call it the jackhammer effect. When price actions on the stock start to get into a topping type pattern, what you'll get jackhammers down on the moving averages. Hammer, 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 until the moving averages finally roll over and start to fall. That's when we want to be paying attention for potential setups to trade it to the downside, or if you trade the inverse ETFs, we can also trade the index ETFs in the opposite direction of, in other words, the inverse ETFs they go up when the regular ETF is going down. So I really like to trade those. As we can see, we're pushing up, and a lot's going to determine on what happens overnight. So that's what we've got for IWM. That covers the market for the market analysis today. Weekly looks like it wants to roll over with TSI just about as high as it can go. Market forecast, momentum as just about as high as it can go and is starting to roll over. So what are we getting up here? We're getting just a bunch of spinning tops and maybe a little bit of clues that, yeah, price action could be preparing to give us more of a pullback. In a way, that's really good. How deep of a pullback? We don't know at this time. I did throw on a Fibonacci on here. Normally, when you have a top, if this top here is a strong high point, swing high, then we can anticipate a pullback into the 38 down to the 618 Fibonacci. That is down in this little box here, and that runs anywhere from about 182 down to $170.56. And so that's where we would anticipate a bounce. Look what's going on here. The 50-day moving average is coming right up through the 382. That may stop the fall if price actions do continue, do roll over and give us a deeper pullback. One of the things that's very interesting, and this was before Fibonacci's were actually added to charts, Charles Dow recognized back in the late 1800s that after a significant move, the way in this case the IWM bounced down here on the last part of October up to the highs from the last part of December, it was normal for the entity, either the indexes or a stock, to take a breather. What would typically the breather be? He observed that the breather was typically a pullback of anywhere from 1/3 to 2/3 of the move up. Isn't it interesting that 1/3 to 2/3 almost perfectly defines the Fibonacci, magic Fibonacci box down here between the 382 and the 618. So that's what we've got going there. I want to just throw out, and we're going to get over to the stocks that I want to highlight here. Let me roll that down and grab a hold of it. Here is one of them. And I'll explain to you what we want to do here. But I want to talk to you just really quickly about it's time to take inventory. If you have jumped into the 2021 trading season without taking, a basically look back in 2020 to see what you did right, see what you did wrong, then you're just setting yourself up to lose. If you're trading without rules, you're setting yourself up to be, a loser. You will, eventually lose all your capital that you're trading with. One of the critical thing, if you're going to be a mechanical, rules-based trader, and I think this goes for anything, any trading aspect or even investment aspect, have a written set of rules, and then work off those rules to then generate your trading parameters, and then apply that to the stocks. And again, at Active Trend Trading, we have great stocks we pull from Investor Business Daily. Apply those to those when you're getting your setup, and then go up with those. If you want to see if you want a copy of my written rules, it goes on one page. I have 4 rules to entry. I have 6 rules to exit. That's it. I will be glad to share it with you. Just drop me a DM me in Instagram, and I will forward you a PDF of my rules. And those rules have been very successful. Since we basically did through the back testing and worked through those, we've averaged over 36% per year going back to 2012. So that's over the last 9 years. And I'm really pleased with that. In last year we did, and I don't mean to throw, because what we do for a PO one year is no guarantee that we repeat it the next year. But my objective and my goal for active trend trading is to basically hit 40% return every year with a 65 plus percent win-loss ratio and on everything we trade. Why is 65% win-loss ratio important? It's important. It's important to because that's kind of the designator, according to Brukowski, who does a lot of the the charting, well, not charting, but the probabilities on a lot of, of different types of stock patterns. He says once that you start hitting above 65% or better, it means that that the system you're trading has an edge, and it's just not, kind of like the 50-50 chance of flipping a coin. It's not just by chance. The system really has an edge. So again, if you want to have that, DM me, send me a message, and I'll be glad to forward those on to you. So let's get over here and look at, so let's see, what to do differently in 2021, and what beliefs and habits do you have about trading that may be holding you back? If you want to know more about that, I will be doing a Bay Area Moneymaker meeting this coming Saturday at 9 a.m. Pacific time. If you want to attend that, you can also just drop me a DM, and I will make sure you get an invitation to that Zoom meeting, because we're going to be covering just that. You'll walk away from that meeting having the tools you need to basically get yourself set up for 2021. So here's a stock I want to highlight just really quickly. And then we're going to do this really quick. What we've got here is ZYXI. I've been following this stock. We've been trading it off and on partly last year, and it's worked its way into a horizontal trading range. That trading range is running from about $14.10 down to about $13.10. This is the kind of stock, and it has made this trip from 1310 to 1410 5 times in the last 50 days. That is a little bit over 7.75% gain from the lows here up to the highs. And so a person can actually set up a trade to buy here at 1310, sell here at 1410, and just let that repeat. In other words, every time you get into a trade down here at 1310, you put in the sell order to get you out at 1410. That sell over at 1410 then could automatically trigger, this is our AutoPilot trading system, could automatically trigger a buy order to buy when it gets back down to 1310. And that we love using conditional orders. So that's one of the trades I want you to be looking for. Again, you can just see it kind of working across here. It appears as if this is a basing pattern. Now, if it breaks out the bottom here, where's our stop loss? We need a stop loss on this. The stop loss on this would be, I think it's down about $12.80. That corresponds to, if you get in at 1310, and if you get out and if you get stopped out at 1280, that's about a 2.5% stop loss. And so that stays well within our rules. Now, what else do we want to? PayPal. I like PayPal. If you like to trade earnings, PayPal is a great stock to be trading earnings on. PayPal has earnings coming up on 1/27 after the market. That's January 27th after the market closes. And what are we getting here? We get a nice little pullback into the 20-day moving average and a pop up. Here's the way I would look at trading this tomorrow, is that if I get a pullback down to about 232.50, 232.60, or just slightly below the 8-day moving average, what I can do is I can roll out and I can buy the 237.50. And well, actually, I have almost 3 weeks to play with this, so I can buy next week's 237.50 by 240, and I'll be able to get into that for about 85 cents. It's a $2.50 wide spread. I would take half. I would get out of that position when I had a half of my profits, or a little bit more, and the expected move between now and Friday of next week, which is what Friday of next week will be the 15th of the 15th of January. the expected move is about $12+. So the way I'm planning this trade, just to be aware, I'm expecting it to, the expected move, plus or minus, of $12 should take me up and through my spread. Up and through my spread. And so that's a great, and so if I can buy that spread for about 85 cents or even 80 cents, and then turn it around and sell it for, let's say, $1.60, I just made a 100% on that spread. So that's one of the things. And then I can roll it in again and do the same thing the following week. And so I should be able to do at least 1 or 2 spreads on this prior to earnings. And then if I want to get really dicey, I can look at buying a call that expires the same week as earnings, and just what we would benefit from there is prices going up, implied volatility going up, which would help increase the value of the option that we had. So that's all I've got today. Excellent. And again, if you're watching this on YouTube, remember to hit the bell, subscribe, hit the bell. And if you're watching on Instagram, IGT, again, please subscribe to us on Instagram and share and save this for future, take a look at it in the future. So again, aloha. It's nice to be home. God bless everybody. See you later.